The S&P 500 is at a 5-year high, but my guest here, Michael Gayed of the ATAC Inflation Rotation Fund, says we could be setting up for a correction. Why is that, Michael?
Well, look, I think the time to have been really bullish was end of November when you started having the fiscal cliff countdown. Everywhere you looked, everyone was talking about a coming collapse in the economy, and obviously none of that happened. You had this incredible start to the year. Now, as I look at the various financial media outlets, it is almost impossible to find anybody making a negative case for stocks, at least in the very near term. Everyone's talking about this great rotation, which I last year called a great reallocation out of bonds into stocks. That's a theme, that's a process, that's not an event. And the market is acting like that entire rotation is going to happen in a single month. So I think we're a little bit ahead of ourselves. Our own models used for our mutual fund and separate accounts sensed enough deterioration within the market based on intermarket analysis to suggest maybe some kind of decline is coming in the very near term.
Okay, now I spoke with you a couple weeks ago and you had expected a correction to come later this year. So what's changed? Why is it coming sooner?
I think it's the surprise of the speed, right? Levels matter a lot less than the speed under which markets move. If you were to look at small caps made new all-time highs essentially almost every day since the start of the year, if you were to look at defensive sectors not really confirming the excitement that's happening in absolute price movement, I still think you can have a setup for a bigger decline second half. But very near term, what's changed is the speed. I did not expect it to happen this quickly.
So what's your outlook for stocks this year or the market in general?
Again, so based on this theme of the great reallocation, there should be this kind of slow drip of money going from fixed income into equities. And at the margin, that increased demand from the mom and pop retail investor should push prices higher. The question is in what pattern, right? It's always, you can close your eyes from the beginning of the year to the end of the year and be higher, but how did you get there, right? Last year was the best year since 2009. You had two mini corrections within that best year. So, I think that steady stream of money flow is going to be very positive for equities into year end.
All right, if you're the average investor then, and you're listening to you saying that there's a correction coming now, do you take some money off the table, or you're the average investor, you're in it for the long term, you believe stocks are going to accelerate over the next year or so? Can you just stick with it while we go through this correction?
You could, but a lot of studies show that volatility tends to knock people out of markets. And the long term is really a rolling series of short terms. So I think if you are mentally prepared for some kind of a pullback, if you believe that, yes, this longer theme of equities rising is real for a longer period of time, then that pullback ends up being something that you actually buy into rather than get afraid of.
Okay, well, there you have it. Be careful in the next few weeks here. Watch the market. We could have a pullback, so prepare yourself for that.